Realtors, if you're wondering what the recent NAR settlement means for the real estate industry and how it's going to affect your business, stay tuned. In this video, we'll look at what changes are expected. I'll go over some of the most common myths associated with the settlement and also give you a few recommendations on what you can do to stay ahead of your competition. I want to start with a disclaimer. I am not an attorney and I'm not a real estate agent. I'm just going to share facts about the settlement and my personal opinion on what I think is going to happen in the real estate industry. So if you haven't heard the news, the National Association of Realtors agreed to a $418 million settlement in their lawsuit regarding the MLS cooperative compensation rule. This settlement is subject to court approval and will be paid through an installment plan over approximately 4 years. Just to clarify, this rule that's been the subject of litigation requires only that listing brokers communicate an offer of compensation for the buyer's broker. NAR does not set the commissions. A simple way to understand the impact of the settlement is to think of it as still being the same destination, but now you're taking a different route to get there. So there are some rule changes, the most significant being that offers of compensation can no longer be made through the MLS. The key operative term being through the MLS. Right, offers of compensation can still be made offline through negotiation and other avenues. Also, sellers can still offer concessions on the MLS. The other change is that agents representing buyers will be required to have written buyer-broker agreements with their clients. Now, a lot of you are already doing this, and so besides seeing updated forms, it's not going to be much different than what you're already doing. It is important to clarify what your fees are and really explain how the cooperative compensation model works. Okay, so let's address the 3 top myths out there. Firstly, the 6% commission is going away. In my opinion, the 6% cooperative commission model is by no means going away. Love it or hate it, the 6% has become a standard for a certain level of service. And it just works not because of NAR's MLS policy, but simply because of economics. Are some listing agents going to cut out the buyer's agent just because it's easier to sign a listing agreement? Sure, but savvy listing agents are going to advise their clients on the benefits of offering cooperative compensation in order to sell their home faster and for more money. The sellers are going to realize that there is a major competitive disadvantage to not offering the buyer's agent a commission. And that's mainly because of affordability. So there are several different variables here. A lot of buyers already have a hard time saving up for down payment and closing costs. So if buyers are strapped for cash and sellers are wanting the buyer to pay the commission out of pocket, there's just going to be a smaller pool of buyers for that house. It's simple economics. It's just going to be harder for those homes to sell for top dollar. You also have to factor in that there are limits to sellers' concessions that buyers can receive, and this varies based on the loan program. Also, the home appraisal is a limiting factor. So the bottom line is that as long as the listing agent demonstrates their value, it is in the best interest of the seller to offer a 6% cooperative compensation. Now granted, this could be different if we saw changes in mortgage regulations where buyers were allowed to roll the commission into the loan. Another myth that a lot of people are saying is that home prices are going to drop. Now the price is a function of supply and demand. And as I've said before, the US housing market is pretty resilient, especially here in the Dallas-Fort Worth Metroplex. Even with the Fed's quantitative tightening policies, we've only seen a slowdown in appreciation year over year. Home values every year are still going up. So with this settlement, I believe that the majority of sellers that want their home to sell fast and for top dollar are going to offer that cooperative compensation off the MLS. There's a lot of pent-up demand, and we're already seeing more buyers enter the market as we come into the spring. The third myth is that tech companies are going to take over real estate making the agent obsolete. Buyer representation is a critical service for consumers in what is often the most significant financial transaction of their lifetime. If consumers knew the complexity of the real estate transaction, they would know that real estate agents are not going away. We're talking about dealing with legal binding contracts, and that's only part of it. Buyers still need agents to negotiate on their behalf. They need a representative that's knowledgeable about the market to negotiate the price and terms, repairs and concessions, and also coordinate the whole process. And it's the same thing on the listing side. Home sellers need someone to help them prep the home to get that top dollar. They need someone to look at all the variables in the market and price that home right. And they also need to market the home to attract the right buyer. If you just look at Zillow's financials, for instance, the majority of their revenue comes from selling leads to agents. So even they need real estate agents. Also, people who have used discount brokerages in the past know firsthand that you only get what you pay for. So the real estate agent is not becoming obsolete. Having said that, are there agents that are going to be dropping out of real estate? Sure. With the technological improvements, we've already seen agents that don't adapt don't make it. So it's no different than that. So here are 3 things that you can do as a real estate agent that can help you stand out from your competition. Articulate your value proposition. A lot of consumers think that real estate agents are overpaid, but it's really a matter of communicating your value and what services you offer. They don't see the hours you spend analyzing the market, looking through hundreds of properties, all the calls and the negotiations. They don't see you work insane hours, burning the candle on both ends, working through the weekends, forfeiting time with your family. So when you meet with prospective clients, show them everything you're doing on their behalf. Value articulated is value appreciated. Secondly, educate your client. The best thing you can do for your clients is to educate them on the real estate process, on the economics of the housing market, on the compensation structure. Be transparent and genuine. You can't fake genuineness. People fear the unknown. They need a guide they can trust. So be that guide and make sure you deliver the best experience possible. And finally, grow your skills. Like I mentioned before, agents that don't adapt don't make it. So work on your skills, learn every day, adopt new technology, learn to innovate, and work on your business, not just in your business. As you grow, your business will grow. To summarize, this model of cooperative compensation actually benefits both the buyer and the seller, and I don't think it's going to go away. Remember, the destination is still the same, you're just taking a different route to get there. Also, don't be distracted by the negativity. It's important to stay positive, stay motivated, and just keep on keeping on. Remember, articulate your value proposition, educate your clients, and grow your skills. If you need help with any of this, or if you have any questions about anything mortgage or real estate related, reach out to me. I would love to help you grow your business. Also, like this video and subscribe to this channel to be notified of other educational content, and share this video with real estate agents you know that would benefit from this. Thanks for watching. Have a great day.